cents per share. $7.50 of expected EPS in 2026. Again, markets tend to price in about the next 12 months. So by 2025, we're going to be looking at 2026 EPS estimates. And, you know, if things went really well and we do get the launch of the robotaxi network in 2025, as I expect, 2026 EPS could definitely come in around $7.50. But you could see the multiple expand to maybe 100, maybe more than that. Adam Jonas, for an example, believes the multiple can expand to about 172, judging off of his EPS estimate and his over $300 price target on the stock. In light of recent developments from Tesla, I'm forced to update my price target by the end of this year as well as 2025. I will go over my thinking and logic behind these price targets and where they could take Tesla stock. But first, take a look at this. I am mind blown. Just months after launching the Cybertruck, the Cybertruck has now overtaken the Model 3, the Model Y, the Model S, and the Model X in Google Trends activity. The halo effect is coming, and you're already seeing this rub off on the rest of the Tesla brand. Right now is typically not the time Tesla sees this much search trend activity, yet it's happening. And I thought this was pretty spectacular to share with you guys up front and center here in this video, because this is the first time ever the Cybertruck has had more search trend activity than the Model 3 or the Model Y. That's pretty dang insane. And this will feed into some of the price target and my expectations for the rest of this year and into 2025. But I think we need to establish one thing front and center. I think Tesla is going to focus more on profitability. I do believe to some degree the Cybertruck being this successful already, creating the start of the halo effect, allows Tesla to not need to cut prices as much, because Tesla was cutting prices to offset just overall weak demand, based mainly because of how expensive it is to finance a vehicle. Tesla had to cut prices to lower that financing cost and to boost sales. If the Cybertruck comes in and creates this halo effect and gets more people to go out and buy Teslas, then they don't need to cut prices anymore. And I think that is what Tesla is currently doing. And I think that's why Tesla is raising prices April 1st, coincidentally my birthday, in the US, as well as other markets like China. They've already raised the price of about 2,000 euros for the Model Y in Europe. And I think this is only just the start. The start of Tesla focusing more on profitability and less on cutting prices to boost demand. Keep in mind, a company like Apple that has not grown in about 5 quarters now, still trading relatively close to all-time highs. This would be like Tesla at $380 or so, and they haven't grown at all, but they've remained profitable and grown their profitability. So in this market environment, profitability is by far king. Growing your unit volumes does nothing for investors, and I think that's going to be the way for the foreseeable future. I do think unless you're seeing some kind of crazy, just explosive top line growth, I think the markets are going to care vastly more about profitability. This was not really a trend for Tesla's business for a long time. From, 08, 09 to, just into 2021, really the start of 2022, it was all about grow the top line. You'll focus on profits later once you're a more established business. You were rewarded for continuing to grow your top line. These days, it doesn't matter much about the top line if you're losing money or not becoming more profitable. And I think that's going to be the way for the foreseeable future, unless rates were to go back to zero and the economy is, still doing okay. Then that's probably how it's going to be for the next 5+ years. So a lot of this price target that I am going to go over is predicated on Tesla focusing more on profitability and has very little to do with the actual unit volumes. Now, unit volumes growing is going to be a good thing, and that's still my expectation, especially considering the Cybertruck halo effect is likely starting to take hold, but it's vastly more about profitability, in which I do believe Tesla is going to become more profitable, and the robotaxi network and the evolution of FSD. That's really the thing that prompted this video, because I have to start modeling this to some degree, because I think it's coming over the next 12 to 24 months. But before we go ahead and get started with the meat and bones of this video, hit that like button as well as subscribe to the channel, because it costs you nothing to do so. As well as that, let me know you are watching the video by commenting down below. Let me know your thoughts on this situation down there. What is your expectation? What's your price target? What would you be happy with? What would you be disappointed with if Tesla was, X price by 2025? Without any further ado, let's go ahead and get started. Now, again, what really prompted this video is the evolution of FSD and the fact that you are reasonably close to seeing the robotaxi network launching in various different cities. Of course, there's still training to be had on the FSD system. There's still work that needs to be done. But at this pace, within the next couple of months, I think Wall Street may be starting to ask the question of, is the robotaxi network coming? You've now got the product that is capable. Is the network itself coming? There's liability concerns. There's issues, of course. Those will get fixed and those will get solved. How's Waymo or Cruise going to take liability and Tesla cannot? I don't see that being as big of a hurdle as some people think. But first and foremost, it all starts with profitability. You can see that Tesla's EPS estimates have fallen over 50% for 2024 and 2025. Now, I think a lot of people forget, when you put stress on a business, when Tesla has been in this situation of just trying to remain as profitable as possible, at the same time cutting prices, you have created a lean machine. Tesla in its day-to-day operations is by far the most leanest machine you have ever seen before. Now that begs the question, can Tesla start to raise prices even more? I don't think so at this moment in time, because borrowing costs are still super expensive. But once you start to get rate cuts, specifically that 10-year treasury yield starts to fall, then Tesla will be able to raise prices a lot more. And I think that is in the back half of this year, in the second half of 2025. That's when profitability is really going to explode. But people forget this. There's two things that move a stock: earnings expectations, forward-looking EPS expectations on Wall Street. That's number one. That moves a stock in the very short term. In the longer term, it's earnings growth, right? So if expectations start to rise that Tesla is going to become more profitable, Tesla stock will rise. That's number one. That's number one for what moves a stock to the upside in the short term. Number two is if Tesla actually comes through with better earnings and continues to grow earnings. And I think that will be the story heading into 2025. There's also another fascinating aspect of our markets as well. Take Nvidia for an example. Nvidia used to trade at higher multiples. Now Wall Street says Nvidia is cheaper than it's been in a long time. Nvidia used to trade at 45 to 65 PE multiples before they really seen this boom to their business. So actually what happens is markets assign higher valuations on a PE relative basis to companies before big growth spurts happen, before big growth waves happen. And now Nvidia is trading at like 30 times. Well, if we could start to expect higher profitability, maybe a robotaxi network, shipping of Optimus or other different catalysts coming down the line, Tesla's multiple can expand quite a bit right now. Of course, it has to line up and Tesla has to come through with whatever they talk about on the earnings call. But you can see a multiple explosion from here based on higher EPS expected in the future. So my expectations for delivery numbers coming on April 2nd, around 440,000 or so. Now, it could be lower than that and likely will be lower than that. And I think that's kind of wasting time to try to figure out what the number is going to be, because I think Tesla stock is priced for it. I think Tesla stock is priced in a way falling almost 30% in one quarter for really bad news. So I think you would have to get a really, really bad number to get Tesla stock substantially moving down. Could the stock move down 1, 2, 3% or so following delivery numbers if they come in at, let's say, 410, 15, 420,000? Of course. Okay. Just of course. That's Could be the algorithms trading around the stock. But widely speaking, markets are not expecting great things, and that's why Tesla stock is down 30%. You've been pricing in this bad delivery number for a long time now. You've also been pricing in a bad earnings report for a while now. So I don't think the earnings themselves, top line revenue, bottom line profits, margins, any of that is going to be too impactful for Tesla stock. The biggest catalyst for Tesla is the earnings upcoming, but more specifically, what Elon says about cutting prices or focusing on demand. The thing that will really throw this entire video out the window is if Elon says, we will cut prices again if we need to. Forget this video was ever posted. That's a problem, okay? And because that just lowers expectations down the line for profitability, and that will lower EPS estimates. On the other hand, what I'm actually expecting is Elon and the Tesla team to really try to steer the markets away from focusing on what the full year delivery numbers are going to be and to focus on profitability. I think Tesla is actively starting to focus more on profitability. There's now 4 different reasons for this. 4. Number 1 is Tesla did not give guidance on their last earnings for this current year. That's number 1. You don't want to have a guidance target over your head for full year deliveries and not meet that because you're now focusing more on profitability. So I think that was step number 1. Step number 2 is Tesla raising prices on the Model Y in the US, in Canada, in Europe, and in China. You don't necessarily do that if you're focusing more on the top line unit growth than bottom line profit. So that was number 2. Number 3 was Tesla lowering the work week for their Chinese employees from 6.5 days a week to 5 days a week. That's a way of reducing the labor cost, hopefully not sacrificing too many units in the process, but lowering that labor cost, effectively giving a round of layoffs, hours wise, right? Layout, less hours, and that could save Tesla labor cost there. Now, number 4 is what just happened, and that is the FSD free trial in now the US and Canada, likely to be Europe and Asia coming next. That should boost profitability quite a bit. We'll see if that really starts to create this software as a service revenue for Tesla. Of course, people are already, paying $200 a month for FSD, but if more people were to sign up, let's say a couple 100,000 people, or if people just opt to purchase FSD outright, those are basically 100% accretive to the bottom line, margins. That's why Tesla's EPS estimates went up about 12 cents after they announced the free trial, because even if a small percentage of the Tesla fleet does opt to do the subscription or opt to buy FSD outright for $12,000, that is big for Tesla's bottom line and for profitability. Now, if I'm wrong and Tesla's not taking the approach of focusing more on profitability, then I will have to bite the bullet and I will have been completely wrong. Now, consider this. If Tesla does want to continue to build out Giga Mexico, continue to build out Giga Texas and Shanghai, the battery factory over there, the other expansion of the battery factory here in the US, they have to take a focus on profitability. I think this is more a necessity that they do this than what they would rather do. I think Tesla and Elon would rather grow unit volumes, but I think they need to, just to fund operations, focus more on profitability without completely destroying EPS and sending the stock much lower. So I think the writing is on the wall for this. Of course, could I be wrong? Yes, but I do think this is coming. So that means a lot of people are caught off sides here. The shorts have been piling on. There's $18 billion currently sold short in Tesla stock, the highest short interest in the last 18 months or so. And I think coming on this upcoming earnings, given Tesla stock has sold off almost 10% 4 earnings in a row, everyone's going to be betting on another sell-off in Tesla. That's going to be like the easiest trade ever in people's opinions. Whereas I think they're going to be very wrong. Very, very wrong. And I think that could set Tesla up for quite a big rally in the very short term. I believe if Tesla does do what I think they do and focus more on profitability, Tesla could rally probably 20% following earnings, like literally the day after, just given how bad sentiment is, how bearish people are right now, that could send Tesla back into the low 200s. Question is, where do we go after that? And that depends on what is said. If the robotaxi network is brought up on the earnings call, there's a lot of different variables here, but let's try to figure out where Tesla stock could be by the end of this year. And take a look at this. In fact, full year 2024 EPS estimates have fallen yet again from $3.09 for full year EPS down to $2.96 of full year EPS. So let's take a look at what Tesla is currently trading at on a PE basis. Tesla stock is currently $175 per share. Let's call it that. I'll actually put the 3 cents in there because the stock's at $175, 3 cents. Divide that by $2.96, and you're looking at a P multiple of about 59. So that's what investors are willing to pay as of right now for your full year 2024 earnings. Now, 2025 EPS is also hitting a new low at $4.06. I'm here to tell you, Tesla did $4.30 of EPS last year. That's probably where we're roughly going to come in again for this year. So times 59 times 430, and boom, you get $254 per share. That's more fundamentally based without any fluff baked into the stock. Now, I can get into exactly why that's going to happen, and it's pretty straightforward and simple to do as well. If we go ahead and consider Tesla's average selling price of about $44,000, minus that by the cost of goods sold as of last quarter was about $37,000. That brings you to about $7,000 of net profit per vehicle that Tesla sells. Times this by about 2 million vehicles here this year. That could be about 14 billion in profits. Now, if Tesla can start to raise prices and continue to lower the average cost of goods sold, then we can come to a different calculation. Now, Tesla includes FSD purchases in this average, price sold of these Tesla vehicles. So let's assume Tesla can do $46,000 for the average, selling price of Teslas. That would be about $2,000 higher than where we are right now. Let's assume this can happen by the end of Q2 or so. So really into Q3 and Q4. Let's assume Tesla can then lower the cost of goods sold of their vehicles another $500 down to $36,700 as well in that same period. That is now $9,300 of profit. And I know I'm leaving out taxes and R&D, and we'll factor in R&D here in just a moment, but times that by 2 million vehicles, you could be looking at about $18.6 billion in net profits. Now, the problem here that Wall Street has had is Tesla guided for about $10 billion of capex expenses. So minus 10 billion onto 14 billion, and you're looking at about $4 billion there. Now, you have to factor in energy, generation, storage, all of the other different business segments, service, business for Tesla, and that's a little bit harder to do. But just going off a base case here for autos, in scenario one, if things kind of stay the way they are and Tesla can deliver 2 million vehicles, minus the 10 billion of capex that Tesla is expecting, that would be about $4 billion of net profits. That's a rough scenario. If you put that into EPS terms, with 3.3 billion shares outstanding, that's only $1.21 of EPS. And then the rest is kind of being factored in from energy, solar, all the other business segments from Tesla. Now, by my calculation, if Tesla can bring in about 18.6 billion in net profits, minus this by what they currently are forecasting for capex, about $10 billion, could definitely be less than that. That is 8.6 billion in net profits. Divide this by 3.3 billion shares outstanding. That could be EPS of $2.60. Well, that's a lot better than $1.21 of EPS. And I think my estimates are pretty conservative. I think $2,000, a jump of $2,000 in the average selling price likely is already happened or will be happening once the trial for FSD is over and more people sign up for FSD. And keep in mind, Tesla just raised prices by $1,000 and 2,000 euros for the Model Y, basically across all of their important markets. So I believe this scenario too is already in the bag here, pretty much. So any further price increases, which I expect by the end of this year, you could start to factor that in kind of as accretive from here on an EPS basis. So you're at $2.60 right now. That's pretty close to $2.96 for, Wall Street's estimate as of right now. Let's take another calculator here. Let's assume Tesla is going to do about 10 billion, which would be not much year over year change in service. Just revenue top line. And let's assume Tesla is going to do about 12 billion in energy revenue, which would be growth, but definitely not on the high side of estimates. That could be another $22 billion of top line revenue. Let's assume combining the two, you're going to be at about 17% gross margins. I know energy is at like 25% gross margin. So kind of lowball estimates here, but that could add another $3.74 billion to bottom line profits. Plus this back to the $8.6 billion that is expected from the auto segment of their business. Divide this by 3.3 billion shares outstanding, and boom, you could be looking at $3.73 of EPS, far higher than Wall Street's current target. So, yeah, that's a big change compared to what Wall Street is expecting. Now, I think Tesla could grow EPS a lot more than that. Of course, with the Cybertruck, I'm not factoring that in. I'm not factoring in insurance or factoring in other different aspects of Tesla's business, but I'm trying to be a little bit more conservative here with some of these estimates. Now, if Tesla does take the full tilt approach to focusing more on profitability, these numbers are going to look a lot better. And ultimately, that's why I think Tesla is going to come in at least with the same EPS, if not better, than what you've seen in 2023, around $4.30 per share. You did get that big one-off kind of boost to EPS last quarter based on that $5 billion like tax deferred recognition that they did take last quarter. So that boosted things quite a bit in that regard. But even at $3.73 per share, I mean, you could times this by about 60. That's a current multiple. That's still $225 per share. That's about $50 higher than where Tesla stock currently is. And that's what 2024 could look like. Now, I'm a lot more bullish on 2024 than that. If you consider about $3.75 of EPS, I think about 430, right? So I'll go ahead and plug 430 back into there. And again, I'm not factoring in everything, so being very, very conservative here in these numbers, at least with the $3.70 number, getting to 430s, factoring in a little bit more of Tesla's business, factoring in a little bit more of FSD revenue. Keep in mind, FSD basically goes to the bottom line. So this whole situation could be a little bit on the conservative side. Come to think about it, but say $4.30. I think if Tesla starts to talk about the robotaxi network, starts to throw things out there, or if Optimus starts to ship, you could be looking at a much higher multiple than where Tesla is currently at. Just consider, I mean, back couple of months ago, Tesla was trading with multiples of 65, 70, right? So times this by 65, you could be looking at Tesla stock around 280 by the end of this year. Ultimately, that's more on a fundamental basis. Stocks don't trade off of fundamentals in the very near term a lot of the time. A lot of the time, stocks run off of good news and what's priced in for the future. If better and better things start to get priced into the future, that's where things start to get juicy. Now, these numbers for 2024 don't matter too much. Let me just be honest with you. It's more so what is expected for 2025. Wall Street's always looking ahead at the next year. For full year 2025, EPS estimates 3 months ago was $5.29 per share. So let's go with that estimate. Even though I think that's low, and I think Tesla's going to come in higher than that for 2025, there is going to be quite a bit of R&D spend as Tesla does launch the next generation Tesla, the Model 2, as Tesla really tries to, crank up manufacturing at Mexico. There's going to be quite a bit of R&D spend for next year. And I think that's why Tesla now is going to take the approach of focusing more on profitability. Now, I think where things really start to get juicy for Tesla is the very end of 2024, the start and midpoint of 2025. I think if I'm correct, the robotaxi network could be launching in the next 12 months or so. So 12 months from today would put you at March 31st of 2025. That is when I could see San Francisco applications going out for the robotaxi network. And I think Tesla's multiple can expand quite a bit. Now, by 2025, we're going to be focusing on 2026, right? That's just how the markets work. But based on 2025 EPS estimates, and if they do start to go up again, technically that's going to affect 2024's stock price. So just if the EPS multiple goes from $4.06 for the estimated 2025 EPS back to $5.29, where Tesla's stock estimates used to be 3 months ago, times that by Tesla's current multiple, well, not current multiple, but a little bit higher than that, about 65, you could see Tesla back at about $350 per share by the end of this year. That's where things get really exciting, okay? $350 by the end of this year could look like a pretty, I don't want to say conservative, but if Tesla does take the approach of focusing on profitability like I think, $350 per share, roughly, could be where Tesla is by the end of this year. Now, by 2025, markets are going to be, evaluating Tesla based on the next 12 months of earnings, which is going to put you at 2026. And this is where I think things get really exciting, because by 2026, we should be starting to launch the robotaxi network, if not already have launched that for 9 months or so in 2025. I know I'm a lot more aggressive with that than some people think, but you're seeing some signs out there, like Elon's no longer referring to FSD as a beta. He says there's a little bit more work that needs to be done, but you could basically drive yourself anywhere. That's what the Tesla X account just said. So by 2025, we're going to be paying attention to 2026 earnings. Here's where things get very weird. You're definitely skewed to the upside for analyst estimates. Some analyst estimates are as high as $10 per share of profits by 2026. The kind of average is around $4.97 per share. If you consider Tesla could bring in $7.50 of EPS by 2025. That's tough to see. Tesla would really have to focus on profitability. And I think with the start of the launch of the robotaxi network, the multiple that people are willing to pay is going to be substantially higher than where we are now. Just think about the kind of profits that could generate long term for Tesla. It is unreal. To try to model that is ridiculous. I mean, there's like 100,000 Ubers / taxis in New York alone. I mean, what would that look like, right? 100,000. Let's just go with that number, times, let's say, 15 rides a day, times 365 days a year. That is $547.5 million, or a million Uber rides, taxi rides every single day. If Tesla can come in and get 20% of that market share, Tesla could be doing 110 million rides in New York alone on the robotaxi network, just with 20% market share. That could be insane. Times that by an average drive of, or average cost per drive of about $30. That could be $3.3 billion in top line revenue, right? And divide this by maybe 50% for gross margins. You could be, oh my gosh, this kid just won't let me work today. You could be looking at about $1.64 billion in bottom line profits, considering there's about 3.3 billion shares outstanding. That's roughly about 52 cents, 53 cents added to EPS based on New York alone. New York alone. And I think $30 $30 per ride is pretty conservative. I think most people pay more than that. And I think that really just puts it into perspective how big the robotaxi network could be, let alone trying to figure out for every city in the US, the potential there is off the charts. So my point is, you could justify a 70 to 100 times multiple on 2026 earnings. After all, some people are already valuing like Nvidia and SMCI based on 2026, 2027, and 2028 EPS estimates. They don't do that on Tesla, and I'm not expecting them to do that anytime soon. But by 2025, we're going to be looking at 2026. If Tesla does start to focus more on profitability, if they do start to boost profitability, and we start to recognize that in 2024, by 2026, EPS estimates could definitely be $7.50 per share. I think that could happen relatively easy if I am correct. Depends kind of what multiple you want to put on Tesla stock to where Tesla stock could be next year. If you want to put the current multiple of 59 on Tesla stock, that would put Tesla at $442. I believe the multiple, again, will expand. So I don't know where the multiple should be or where it will be. I think it depends on what rates are doing in 2025, what the economy is doing as well. You should factor that in a little bit, and we can get more precise on this as well. But $7.50 of EPS, times that by maybe a 75 times multiple, and you're at $562.50 per share. $7.50 of expected EPS in 2026. Again, markets tend to price in about the next 12 months. So by 2025, we're going to be looking at 2026 EPS estimates. And, you know, if things went really well and we do get the launch of the robotaxi network in 2025, as I expect, 2026 EPS could definitely come in around $7.50. But you could see the multiple expand to maybe 100, maybe more than that. Adam Jonas, for an example, believes the multiple can expand to about 172, judging off of his EPS estimate and his over $300 price target on the stock. So I think the bottom line is, any way you want to look at this, you're looking at some huge gains coming in the not so distant future for Tesla stock. Let me know what you think about this down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.